और रही बात मार्केट
of an existence-defining pandemic. Virtually every aspect of human life has been drastically altered. Yet, what has been achieved on this troubled journey has been no less extraordinary. We are now better prepared to deal with the invisible enemy COVID-19, which keeps threatening the entire world from time to time and even more recently. The Indian economy has literally hauled itself out of one of the deepest contractions in the first quarter of 2021 to a position in which the GDP has expanded by 13.7% in the first half of 21-22, in alignment with our projections. In several sectors of the economy, pre-pandemic levels of output have been crossed. Inflation is broadly aligned with the target of 4%, barring, of course, short-lived spikes. External financing requirements are very modest, and strong buffers should withstand any global spillovers. Public finances have been strengthened by buoyant tax revenues. The central and state governments and the Reserve Bank of India have mobilized policy actions on an unprecedented scale and scope to bring about this outcome. Equally, the selfless and tireless efforts of our unsung warriors among municipal and local bodies, healthcare, police and administrative personnel, philanthropic entities, and civil society are praiseworthy. They remind us of a quote from Mahatma Gandhi: "The best way to find yourself is to lose yourself in the service of others." I think this pandemic truly brought India together and could just be the moment of India's arrival as a global growth driver. Let me now turn to the deliberations of the Monetary Policy Committee, which met on 6th, 7th and 8th of December. Based on an assessment of the macroeconomic situation and outlook, the MPC voted unanimously to maintain the status quo with regard to the policy repo rate, and by a majority of 5:1 to retain the accommodative policy stance. Consequently, the policy repo rate remains unchanged at 4%, and the stance remains accommodative as long as necessary to revive and sustain growth on a durable basis and continue to mitigate the impact of COVID-19 on the economy while ensuring that inflation remains within the target going forward. The marginal standing facility, that is MSF rate, and the bank rate remain unchanged at 4.25%. The reverse repo rate also remains unchanged at 3.35%. I would now like to dwell briefly on the MPC's rationale for maintaining status quo on the policy rate and the stance. Noting that the economic activity is broadly evolving in line with its assessment in October, the MPC was of the view that the sharp and sustained reduction in new COVID-19 infections and the rise in vaccination coverage are contributing to consumer confidence and business optimism. The prospects of economic activity are steadily improving, including for contact-intensive services that were hit hard by the pandemic. The MPC noted the supply-side measures taken by the government to contain food prices, as also calibrated reductions in central excise duties and state VAT on petrol and diesel. Crude oil prices have also softened since end November. These would alleviate to an extent the domestic cost push build-up. The recovery of aggregate demand hinges on private investment, which is still lagging. The MPC regarded the accentuation of headwinds emanating from global developments as the main risk to domestic outlook, which is now somewhat clouded by the Omicron variant of the COVID-19. Moreover, given the slack in the economy and the ongoing catching up of